Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up for a very, I guess, lucky day, 7-Eleven. Or is it? You know, it depends if you're on a crap table. It's not always the best, so we'll see what happens. But it is July 11th, 2024, and as my clock goes, we're about 7 minutes to 7. I've watched enough of the presidential news conference that came on an hour late to still have not changed my mind at all about the ability of our current president, and not saying he's not a good man, not saying he's a man that doesn't care. I do believe that there's an age issue here. Seen it, had a father that had it. Forget it. That's how I look at it. All right. So when you look at all this, what do you go with it? Well, today we had as you know, the CPI numbers, and I gave you some parameters last night, and the market certainly fell within those parameters, but to the friendly side. In other words, we had numbers that came in milder than the expectations in the market, which instantly opens the door that this is a winning month of June, June, for Fed Chair Powell. He can book this one that labor markets weakened, not fell apart, weakened. He can label this that CPI, even shelter numbers, they're starting to come down. And by the way, in shelter, they change, I believe, in the next report, how they count. And some people think it's been overreached in New York City primarily because the weighting and how it goes affects all the numbers everywhere. So we'll find out if that is true or not. I read an interesting article on that probably at 3 this morning or 3:30, and it was pretty interesting as to how they say this is all done. But in any case, it's favorable. So what happened today after that is pretty simple. The tech stocks got profit-taking, and the stocks that have been the low cap and the Dow, which have been out of favor to a degree, especially the low cap, the ones, the Russell, they got the big pop in them. Okay, it's a one-day event, could be a trend, could be a bottom. We will find out over the next probably 48 hours or so, but it certainly caught the market off guard. You broke hard in the dollar, you kicked up most currencies against it, and in the Japanese yen, you had an especially strong day off of this. And with it, there's word, I can't prove it, nobody can, but I've read reports in the press that there might have been some intervention in addition. You got double bang for the dollar weakening, put in a little intervention, and drive the yen sharply higher. That's the way to do it, and if they did it, brilliant move at the right time and not wasting a lot of currency on it. Now you can't be short the yen for a bit here. Can't be short, in my opinion, the Russell for a bit here. A pullback happening in others, and we'll get to it, and you'll see them. You also had big rallies in the bonds and the notes. Is there going to be follow-through? Don't know. And, of course, markets that are based in dollars that we do a lot of export on, well, they got some bids today. So when you take a look, you're not up very much for the week, but you're at an all-time high if you close here on a closing basis in the S&P. You're up 0.32%, another 18 points, but this is a close-only chart. When we take a look at what happened, well, you had your reversal day. And as we take a look at the market, you have a lower low, a higher high pattern, okay. The support in the market's back here at the 18-day average of closes. Let's call it the 55.77 level. The market is now fighting at the upper Bollinger Band, so we will get a chance to see just what that's going to be at. We get PPI tomorrow. They're looking, by the way, in that market for it. I don't know if I said this or not. They're looking for it to be about flat, maybe a tenth, a point either way, not a full point, just a little bit. And they're looking tomorrow for the July consumer sentiment to come out a bit stronger than it is. But I'm talking fractions of points. I am not talking big numbers. We'll see if that happens. Here's something you have to be concerned about. When you lose an embedded reading, and let me walk you to this. Here's the close today. You were embedded. You didn't lose it. You didn't close under 79. Going into now Friday's trade, which we're in, you're losing it, but it's not lost. if it manages to resurrect itself, it could get very interesting and cause some short covering in the market. I don't know if it'll happen or not. What I do know is that it's losing it. And when it's losing it, I tell traders, you back away. You don't throw your money into that market, because if it wants to correct and it can gain momentum, which I expect if it stays that way, I wouldn't be surprised if price and the 18-day average next week make a run at each other. In the NASDAQ, it's pretty much the same thing, or is it? Well, it's a little different. You lost the embedded reading, past tense. You didn't have it over 80 on the close. And now what you've got in the market, let me come back here to it. There we go. Now what you've got, it's diving even deeper. Like the S&P, a lower low, higher high. You tell yourself, where did that battle happen? And when it was up there, I get so many people, it's going to keep going. And I go, you only stay over that Bollinger Band 5% of the time. This is called a gorilla glue trade up until today. And now you have a huge outside day down in both this market and the S&P. That is not a continuation pattern, but it's also not the end of a trend necessarily. It starts a correction. That's how it is, because of where it's coming from, the highest high of the move. And by the way, folks, this is a key reversal. What's the difference between an outside day and a key reversal? Sometimes when you make the all-time high or an all-time low and you get the outside day in addition to it, it's called a key reversal up or down. And it has much more weight according to many of the people that follow those patterns. In the mini Dow, well, you can see you're still sitting here in that action, but it's trying to move up. It's overbought. Can it break out or not to the upside is the big question. And in the Russell, that narrowness, and I'll just take you back here so you can see it. Right here, which way is it going to go? Now, up until today, the bears were in control. If you took this out right through here on the daily chart, the weekly was similar. I think it was around 2085 on the weekly. If you took out this 2072, what would happen is now you up into the 100-day average, if you can clear that. And if you catch everything, then probably stop orders start taking place in the market. It's exactly what happened. So you're back up. You've made up a lot of ground in one day. Do I think it's the beginning of a move in the Russell? Well, it certainly is a continuation of a move for those that were buying it and they think that they've got the day won. If you can get a pattern, if the market were to finish just the way it is at this hour, which is now 7 on the head, with the market a higher high and right at the top of the range, I would say it's a breakout, and until you take out this low again, a major bottom is in. But it is 7 o'clock at night. I don't know what the market's going to do. It is overbought. I would not tell clients to buy over a Bollinger Band, but I'd be paying attention to that pattern. In the 10-year note, absolutely no surprise. I had somebody ask me today when the market was coming, Ira, what do I do? We're approaching it. I said, say goodbye to your position. Same thing in the 5-year. First challenge of a Bollinger Band, overbought markets. No, you take money off the table. Now make the market prove itself. You can always get back in. In the dollar index, you fell down, and you tell me where the market stopped. This is the 200-day average. You went right down. Let's just see how close you got to it, all right? You got to 103.77 and a half. The 200-day average was 103.78. And that's where the market, for the moment, has grabbed itself some support. We will see. But the trend is down, the bias is down, but no. I think you'll have a better shot inside the Bollinger Band if you're trying to go short rallies than underneath that number. And in the euro, the first move over the 200-day average and the 100, back to the Bollinger Band. This is a big zone to fight. I wouldn't let some time go by before I'd go putting money at work in that type of pattern. The British pound probably headed, and I said it this morning, could be going to the 130 level. We're not too far away. We got up to 129.50s today. And it's just a mixture of a lot of good things, a new government and the market giving the benefit of the doubt to the currency. In Bitcoin, still acting bearish. We haven't heard anything from the SEC yet on Ether. We should soon. In the energy markets, well, it's interesting. The Brent price, as much as it's come up, what if I told you that the crown prince in Saudi Arabia, who really runs the country, is now pulling the budget back on the the fantasy city that he's building. What is it, Nome, I think it's called. They're pulling back parts of their budget, not enough money to meet where they're at. Okay, that also tells you a story. That tells you that they want to let more oil onto the market at some point. Now, we did see today the IEA report come out, and it does not agree with OPEC. It does not see the same demand going forward. It's more in tune with British Petroleum's report, believe it or not, and the DEA. So when we come in here to the crude, higher high, lower low for WTI, not trending. Sort of drifting here between the Bollinger Band and the 18-day average of closes. You're trying to find support in gasoline right at these prices, at the 251 to the 251.94, but you're not trending. You're trying to find support there. You have a higher high, lower low. A trend is either higher highs, higher lows, or lower highs, lower lows. When you get this mixture, I just call it noise in the market, and you wait for better setups. This is a bearish trend in the natural gas. Keeps coming down, and I told you, I've got traders that have been playing this on the short side with the UNG over this, but you're very close now. In fact, you're getting it tonight. You got the 18-day average underneath now, the 100. So you're getting a full bearish setup here where the shortest term average is under the, we'll call it the medium, the 100-day average, and the 100's under the 200. On hard rallies, the pros will be selling into those type of averages, in my opinion. So I want to remind you of a couple of things. You know, we talk these indicators here, and they're so easy for you to work with what we put together from our good friends at Futures Magazine. And they did this article years ago, and I was very involved with the editors and so on as this was all taking place. And I think it's the coolest thing to this day that has been out there. Just look how it looks on the screens here, how easy it is. Look at it. Look at the samples. See what you've got there. It's all about learning ideas about this, be it the cycle timing, be it the different type of chart patterns, the trend lines, Elliott wave cycles back and forth in the market, spread ideas, the Arun indicator, which is really price-time relationship, options primer, all kinds of great examples for you to take a look at, and theories. Last, money management, stop orders, how you approach markets. How do you get this? And it is free. We send it as a PDF off to you. Just go to iraepstein.com, free offers, or move your cursor up here to the top. You'll see an icon. And while there, choose any other offers you'd want. I'm Ira. Be with you first thing in the morning, and we'll review the PPI at that time. You have a great evening.